I just want to share that that is what that is, and we can get started. We'll give it one more minute. Actually, you know what? Let's just get started, right? So in terms of the markets, last week we did pretty well. We did not take any trading positions, but we did go ahead and identify within the commentary what direction we believe the market was going to go based on price volume volatility, right? To get back to our roots and to be able to understand this is what has always worked for us, and all the fancy schmancy algorithms we built have been some iteration or some derivative of that model, of that rule, price volume volatility. We were able to identify the bump in the market, and then we were able to identify a big whoosh on the downside. In fact, that whoosh was a total of 1,500 points in 2 days, that if anyone had taken that research and acted upon it, they did quite well. In fact, the thing that we're kind of kicking ourselves for this morning is that on Friday, we sent out a note via the Facebook group. We put a picture of new core steel. It was a 21 red and green. It really was at a point. And unfortunately, in markets, because it's all actual humans doing the trading, and well, let me rephrase that, right? There are a lot of algorithmic trading. There's a lot of automated computer trading, but that trading has been created by a human to begin with. And even as advanced as those algorithms are, because the markets are so expansive, right? So when someone says, well, that has nothing to do with the price of tea in China, well, it actually does. It's just many points of separation, right? So for instance, what does the price of hogs in Alabama have to do with the price of tea in China? I couldn't actually tell you every single point along the line or how many variables there are, but I can tell you that they are related. That's a fact. The point is, those algorithmic tradings don't know every single point of contention as well. The point being, or at least my bottom line being, even the computer trading is based on humans, because the humans are still smarter than the computers, because they are the ones that are trying to identify the points of relationships. And until they're able to identify every point of relation, the computer is unable to be smarter than humans, because it's being given flawed data as a starting point, right? So the data being given to computers is the data that humans have. Okay, here's all of our data. Now the computer goes ahead and operates on it. But the assumption is that all the data that we have is all the data, and that's not the case, which means computers in trading are still subservient to humans, because humans have guts, they have feels, and they're unable to put them into words. The point being, the trading is still human dominated. And I would say dominated to 100%, because even the computers are derivative of the humans. They're still not smarter than the humans, because the humans are not smart enough to not know what they don't know. That being said, we were able to, so the point of that big soliloquy was that we as humans still have human emotions. So the loss that we had taken on ice was quite unfortunate, because we compare it to playing roulette, where you have red and black numbers. And of course, there's that one green, but because there's only one green out of 39 numbers, and it's 37 numbers, because there's 36 plus the green, which equals 37, that you never actually play for the green. The odds are not in favor for you to play for the green. In fact, if you play for the green, you are either nostalgic, right? I love green, and the green is a rhino color, so I understand. But you're playing for, okay, a 1 out of 37 chance, which means in your head, you might be thinking, you know what? I always win with green, and I always play green. Green's my good luck. I'm going to play it. That's fine. You're at least able to believe your own SHIT, which is good. Good for you. But in no sense of the word does playing for the green actually make any sense, because you're playing 1 out of 37 odds, which means when you play red and black, when you play the board, you're playing 36 out of 37 odds. I can tell you 36 out of 37 is correct 36 out of 37 times. That's the amount of times I'd like to be correct. In doing so, you're guaranteed that 1 out of every 37 times, on average, you're going to get annihilated. That no matter how good everything is, you're going to get blown up, because that's the odds of the game. In Wall Street, in the stock market, it is the same concept. To go ahead and say that nobody has inside information is completely cuckoo for Cocoa Puffs. Because if I don't want to even use myself as an example because I can see that somewhere down the line, things get taken out of context and people are like, hey, Anthony, owner of Rhino, right? There is a possibility that somebody somewhere can know something about their company and have a friend or a family member or someone they owe a favor to or someone they're just looking cool in front of and saying, don't say a word to anyone because I will deny it. But A, B, C, and D, don't say a word, but I'm telling you something before it's going to happen. That's not a difficult sentence to say. In fact, from our side of the fence, because we're not of that super uber duper elite demographic yet, we don't actually know the ins and outs of how those parties work. I can tell you those parties that those people have so many different, so many different understandings of things never to say again, that sharing a secret is really not even that high on it, right? There's a lot of different temptations, a lot of different cardinal desires that people of means are able to participate in because they're all operating under the assumption of mutually assured destruction, which is actually a really, really strong concept. And the concept states that if everyone has something to lose, everyone acts in the best interest of all the participants in that sample size. Because if I have the same thing to lose that you have to lose, then I can't go ahead and do this to you because I know you can do it to me. It's the concept behind all countries having nuclear warheads. No country has a nuclear warhead with the express decision or the express intent to ever use them. The reason to have them is, hey, buddy, if you ever use it, then I'm going to use it. And if you bomb me, I'm going to bomb you, which means you will never bomb me because anything that you do to our country is going to happen to your country. So in the weirdest sense, nuclear warheads, if you calculate that at least one person will own one nuclear warhead, the world is much safer with everyone owning a nuclear warhead. Either no one owns them or everyone owns them because nobody owns them to use them. They own them to deter the other person from using them. Point of the story being, in these mutually assured destruction type of venues, it's not uncommon for CEOs or CFOs or people of companies to share inside information because, again, mutually assured destruction. The point of all of this that I'm sharing with you is that there is that roulette type scenario where you can invest in a company that somebody knew inside information. So what our algorithm picks up is exhaustion, right? So this particular company has behaved in such a way to show a very high level of exhaustion. At the same time, that exhaustion is showing to be so outsized, so out of the realm that it's becoming a coiled spring. And we know the company's not going bankrupt because we see money going into it still. 36 out of 37 times that produces a result that's much higher. And that's what our algorithm bases off of. But in the scenario of inside information, where one person, say, or a large group of people that are able to have the funds to act on it, know that company A is actually going to buy another company. And now when a company buys another company, they take on debt. They take on, dilution if they're paying in stock. Their earnings aren't going to recover for another year or two because they now have the integrations and the synergies and all of the stuff. So when a company's buying another company, their stock usually goes down because of the investment they're putting out, hopeful that the return on it is down the road. It's the company that they're buying that goes up because now someone just gave them a whole bunch of money. In that scenario, company A that is buying another company would exhibit the stock coming down in such an outsized way because why is this happening? This has never happened to this company. This is outside the normal trading pattern of this company, which we pick up, which offers us an opportunity, except when that ball turns up green, when the company's buying another company that we don't know because it's inside information. At the same time, that exhaustion is at such a rate, such a velocity of velocity, right? Such a rate of change that is becoming a built spring. Why is this happening? It's happening so quickly. This is really an opportunity. And at the same time, the mass amount of people in the market that don't know that this is inside information are still putting money into it because they're seeing the opportunity as well. We go ahead and hop on an opportunity when it measures a point of exhaustion that's so high that it favors us at like 90 out of 36 out of 37 times. But when that company is only going down because inside information knows that they're going to buy another company, that's the green ball. That's the 1 out of 37 that we just look around and say, are you kidding me right now? And it's unfair. It's illegal. It's a felony. But what do we do? You know, it's like not my wife, actually our old personal project, and not that I relate it to, but I'm trying to think who told me this. And in my life, there's my wife who I have the most intimate conversations with, and there's my team that I have the most intimate conversations with, obviously of different themes, right? But in terms of who I would actually see face to face and speak to, that's why I'm lumping them in the same sentence. Point being, our old project manager, Abigail, would say to me at certain times, hey, Aunt, I like this company, we can use them. And I would say, well, they're overseas. I don't really have a high level of confidence. And she goes, no, they do great work, and I got them to sign a contract. And a contract is really, really strong. That's a contract. Except, how do you enforce a contract for someone that lives overseas? What, are you going to send the police to Uzbekistan? Are you going to have them deported from Malaysia? Like, you can't do that. So the contract, you can't, even though you know the person breached, even though you know your rights, even though you have on paper that this person was wrong, how do you enforce it? You can ask any parent the same thing when they say, hey, my son, my daughter, you better not smoke pot, you better not do drugs, you better not do this or else. Well, how do you enforce it? Hey, you better be in bed by 8 o'clock or else, but at the same time, the parents go out for dinner. How do you enforce it? The same thing with the stock market. Hey, Deborah, greetings. When somebody goes ahead and you know that inside information was behind how you got, in a nice way, treated very unfairly, how do you enforce it? What am I going to do? Call the attorney general and say, well, based upon my algorithm and my experience, I believe that this happened at a private party where mutually assured destruction is going to make sure that no one testifies against anyone, but I know it to be the case. They're going to be like, really? Like, are you kidding me? You sound less coherent than not getting into politics, right? But like, you can't do anything about it. So the reason I spent 14 minutes talking about everything I just did was to go ahead and share with you why we do not own Nucor Steel, even though we put out an alert Friday that it's 21 red and green, it's highly depressed, and we believe it's going to pop. In fact, because of that recent, and this is what it's called, muscle memory, I just got burnt, and the emotion of losing with a 24 red and green has led me to now have the human response that if I lost with a 24 red and green, I'm certainly not going to jump into a 21 red and green, even though 36 out of 37 times, 20 red and green has always been successful for us. In fact, ICE is the first time it hasn't been successful. So a logical mind would say, Anthony, you know why you lost on this, and it was for reasons outside of your control. And if you want to try to control those reasons, the only way to do it is to get out of the market altogether, because you can never control that 1 out of 37 chance, that green number, that inside information. So if you're not willing to leave the market completely, you have to go ahead and forget that memory and start operating under logic again, because emotionally, you're making the wrong decision. So when I went ahead and put out that note Friday, I even knew it as I was writing. Oh, I really hope it starts down Monday, because if it does, I'm going to buy it. Almost like I needed God. I needed the fantastical, awesome power of the universe to bail me out. And in writing that, I knew it. In fact, I was actually looking at the computer. I went ahead and pulled up my account. I had my finger on the buy button. And I was like, I should just do it, because I'm not going to buy it all. If it's down Monday, I'll buy more. If it's down Tuesday, I'll buy more. But the recent memory of losing with ICE had hurt me, right? Like, and that's the thing about the market. You could have a resume that that looks half as well as mine. And I don't mean that to impress you, but to impress upon you. I've done this for 8-figure net worth people. Like they would call me and ask me for advice, right? So when I say my resume, it really goes far back. It's not that I've just been sitting in front of a bunch of computers and day trading. Like what I'm sharing with you is something that was once reserved for only, what is it called? The 3 Comma Club, right? So the point being, even I am completely hostage to emotions. And when you're, until you, it's, I was joking with my wife over the weekend. Whoever invented the format of, you better, if you do not control your food will control you. Like that proverb type format where you could say, if you don't control the thing, then the thing controls you. And I challenged my wife. I said, come up with something that's not true for. And she couldn't, right? Some of it is actually true. If you don't control your emotions do control you. And you can use it if you do not master your emotions, your emotions will master you. And of course, I'm trying to sound like a sagely old Asian, because I feel like I grew up watching, The Karate Kid. So the sensei was always like the smartest person in the world to me. And I always felt like those really super sagely advices is like reserved for like Buddha or just Asian culture, because Asian culture is very cyclical. They see things in cycles. In a lot of ways, they're much smarter than the Eastern side. Because America, you could say whatever you want about America. It's been around for like 300 years. You could say whatever you want about China, but it's been various forms of dynasties for like thousands of years. So when you play the long game, you might not always be on the top, but you're always relevant. When you play the short game, like the US, you start with George Washington and you end with Joe Biden, right? So again, I'm getting into politics, but that's that. So that was why I was saying it the way I was saying it. The point being, because I was held hostage by my own emotions, I did not participate in the new course deal when it was 117, 118, and last time I looked, it was 123. Now, everyone knows we would have bought options 1 month out at 120 because we would have rounded up to the next point. We probably would have paid, I don't know, $1, $1.50 for them at most because the market was down 600 points. And the next day, Monday being the next day from Friday, it's already up 3.5 points from the strike price, meaning those options would probably be $4 today, $4.50, which means we would have made 200 to 300% on our game over the weekend. Now, why didn't we? Because we just lost 97% in a trade. Therefore, we were very, very gun shy to go ahead and get back in, which is actually a commentary on the market. So there is a purpose for me saying this other than self-aggrandizing our own unique scenario. The behavior in the market is of humans. We just said that is of emotion. How many people in the market have gotten scorned, have gotten beaten, have gotten thrown out the window, have gotten their portfolios annihilated, have said, I'm done with this, I'm not coming back to it over the course of the last month or two? How many of those people say it's been a good decision because I'm hearing all the chatter of really, really bad things that are still happening? There's still a pending crash. Things are scary. In fact, I'm in that camp, except I'm only in that camp because of the confirmation bias of my own hostage that are holding me hostage. Now, as I'm saying this, I'm allowing myself to see the light. I'm allowing myself to heal myself from my own confirmation bias by pointing out what it is that I'm doing to myself. And what I'm doing to myself is I stopped trading. I've removed myself from the market, and I'm still justifying that by participating in the doomsday scenario that's still upon us, that's still in front of us. Now, all of that might be something that you agree with, but all of us can also agree is that's emotional or is that logical? Whether it's right or wrong is irrelevant. Is it emotional or is it logical? Because the probability of making a mistake when acting emotional is many, many exponential times higher than when making a mistake when acting logical. Anyone that knows the way I operate Rhino Street is like the most logical, most that you could possibly be. As I pertain to trading, it's mostly logical, but there is emotion in it, which is why everyone that participates in Rhino Street has never, ever uttered a, oh gosh darn it type of word. People that participate in Rhino Wealth have said, oh my God, I do well, but then. because it's not an exact science. In Rhino Wealth, we are calculating the decisions being made by others in a probabilistic way that favors us. In Rhino Street, we are making the odds. We're making everything we're doing. We know exactly what's going to happen because it's only up to us in our execution to do it, which is why the results are quite different. But we like being a part of everything, and we like helping everyone where we can. And we've never taken any responsibility nor credit for anyone's performance. We are just operating a free, nonprofit venue that allows me to think out loud and share research with others. In fact, my performance and others' performance are not equal. There are people in this group that have done better than me. There are people in this group that have done worse than me. This is nothing more than a powwow where we get together and say, hey, what do you think? What do you think? What do you think? This is what I think. Great, now let's go. So we're going to go ahead and take a look at the market, but we are going to take a look at it through the lens of the following. Those that have lost money in the market and have repeatedly lost money in the market are prevalent, are the high population. And we say that because we use me as a measuring stick. Okay, it happened to Anthony. Now, what percentage of people do we believe have a better resume than Anthony and have I don't want to say poorer, but a less competent resume than Anthony? And when you go ahead and factor in that Anthony had been doing this not only for 15 years, but also grew up with his father being in the business, so he has experience with it. Like I got option CDs when I was 10 years old. So ever since I was growing up, not only was I was an A+ student, but my focus was this. So nature, nurture, whatever the case may be, plus career success, I would say I'm probably more competent than 80% of people, right? There are 20% that are like really, they've developed it more than me. But I don't think they're naturally smarter. I think maybe 5% are naturally smarter, but I think 20% are more competent in knowing the material. Meaning, and again, I'm estimating, and this allows you to estimate as well. This isn't Anthony with his head getting large. This is Anthony just trying to be as objective as possible about a topic that I'm naturally biased in, so you come up with your own numbers, right? Okay. But if you even say that Anthony is more competent than 70%, you would say for it to then hit Anthony, and Anthony to step back, and Anthony to not take advantage of something he knows is going to be successful 36 out of 37 times, how many people have said, whoa, I'm just out? And if the number of, whoa, I'm just out people are large, then the following is likely. A, that we're much closer to the bottom than we are the top. But secondly, we are still highly susceptible to a crash. Now, a crash is when the market precipitously comes down. Now, the only way a market, and you might say, well, Ann, we've already lost so many points. How can you say a crash is more likely? Well, a crash is completely dependent on volume. Because if 70% of the volume got taken out, right? Like 70% of the people got taken out in a meaningful way, that means you only have 30% left. Of those 30% left, they've seen the 70% leave. And they're now thinking to themselves, did we overstay our welcome? Which means they're on the brink of, whoa, I don't really know what's going on here. No one's really around anymore. I got to be quick to leave if I'm going to leave, right? Meaning when things start precipitously coming down, they say, okay, that's my sign. Sell, I'm out. And they run over to the group that got out before them, which means that cascades down on those people. Now, there's a percentage of those people that say, I know what's going to happen. I'm competently accepting that this market is closer to a bottom or it's going to crash, in which case, if it does, I have so much money waiting that I will buy that bottom. And I will know that at that point, my stock is going to be that generational opportunity that's going to fly for years to come, because every component of a market, not earnings, not multiples, not inflation, none of that. All of that is noise. None of that means anything to an actual buy or sell. The only thing that matters to a buy or sell is people. Now, people then go ahead and calculate those things to decide to buy or sell, but the buy and sell is the important part. All of that is just a precursor if you know how to calculate it. So if the people are all gone and the people that are there, bought the bottom, that means the only people in the market are the people that bought the bottom. What are these people doing? They already sold. So how can this go any lower? It can't, which means it progressively stays where it is or starts moving up. In which case, those people that sold, i.e. me, who are already kicking themselves because they see an opportunity to get away, are much more prone to get into the next opportunity. To say, okay, I tested the waters, I'm kicking myself, let me dip my toe in. As more of these people start dipping their toe in, then more people say, okay, it worked for them, let me get back in, let me get back in. Then this starts moving because, again, remember the volume, it's only a little volume. So with a very little volume, the more participants that come in move the price up. For instance, if I have an apple and you want an apple and we're the only ones in the room and I say this apple's $10, you might say yes. Is that the market price of an apple? Yes. Is that the fair market price of an apple if you brought the whole world in? No, because the more participants allow the market to become fairer. It becomes a realer price. So when everyone's coming in to buy, well, now the price exceedingly goes higher because it's now representing a fair price relevant to a fully participated market. So what does it mean to the Calishone household? My last name, by the way. My wife and I contribute to our son's, his tax deferred. So I think it's IRA or UTMA, like he has accounts, right? And we go ahead and we add $500 a month. So we started the UTMA account with a large amount, and then he has it's fully tax deferred or whatever. And then we have an IRA for him, which people would say, IRA, don't you have to work? Yeah, he's part of the payroll here. Because he's going to be part of the company, well, because he is part of the company, but because he's going to grow up and be a larger part of the company, we're teaching him, watching the videos, working with dad, algorithms, what does it mean, just getting a sense of it, so that when he is 4, 5, or 6, 10, 11, 12, 15, 17, 18, he's going to have grown up in the business to be such a high valuable asset that one day can run the company going forward. Meaning that starts early. So we hired him. So he gets paid $500 a month, which times 12 months equals $6,000, which is the limit for IRA in terms of tax deferred income, or I think it's tax deferred. Meaning that $500, he goes ahead and buys mutual funds, aggressive tech growth every single month. So the point of the story is to really know what someone truly believes, ask them what they would do for their own family. For my own family, obviously our son has an 18-year time horizon before that becomes funds he could go ahead and withdraw. No, actually, I'm so sorry. IRA is till he's like 65, right? It's a very high number. So he has a very long-term horizon for that money. But even still, we believe that right now is the time that you should be buying. Now, if you have a long-term horizon, buy equal amount every single month. If you have a short-term horizon, buy 50% and break it up however as you please. And if that crash comes, be very quick to put that other 50% in, because everyone's waiting for it. And when everyone's waiting for a crash, two things happen. You either get it and it's very short-lived, or you don't get it because everyone's waiting for it. Now, I know what you're thinking, Anthony, that's black and white. That's two opposite things. Yes, but they're not, all opposites aren't equal. If the crash comes and everyone's waiting for it, equals it's short-lived. Therefore, if it comes or if it doesn't come, the result's still the same. The market's higher months from now. Meaning, if you want to wait for it, God bless. If you don't want to wait for it, it'll only really hurt for a couple of days where you're like, oh my God, my stocks crashed. Oh wait, they're coming back, they're coming back, they're coming back. So that's a you thing, you figure that out. But that's our commentary on where the market is and what we can expect to happen, and using ourselves as an example, while being completely, I hate the word transparent because everyone uses it. It feels like a marketing word. But in terms of allowing you to see into my soul, allowing you to actually see the calculations that have allowed me to identify a mistake happened and why the mistake happened, and communicate it to you in such a way that you're able to understand how to avoid the mistake or how to identify the mistake and to go ahead and use the mistake as a metric to go ahead and forecast probabilities going forward. I hope I was able to do that for you. Huh. And you know what's funny? When I'm home, I don't talk like this. When I'm home, I'm like, okay, I'm on the couch watching Criminal Minds or something with my wife, or I'm picking up my son and throwing him in the air saying like goo goo gaga. It's really funny how environment does things to you. And it goes to the sentence, you are who you surround yourself with. You are where you are, right? Like, I remember, and I'm going to get back to the markets, but I remember at an early age, someone gave me the advice, if you want to go ahead and turn around your life, buy a new outfit and go get a car wash. And I was like, that sounds completely nuts. Now, at the time, I was smoking cigarettes, right? And I'm like, I hate that I smoke cigarettes. I get up and, I'm just kind of feeling a little bit of a lull, right? I think I was like 17 at the time. So I did this stuff. I think I was coming off a breakup, like normal teenage stuff, right? And I went out and I had like $100, $200. I went and bought an outfit from Express, which is A, equally my favorite place to shop, and B, the most promotional place ever. If you walk into Express, they're giving you coupons. Oh my God, here's $100 off if you spend $120. And you're like, that doesn't even make sense. But okay, I'll take it. So I bought the new outfit. I bought the shoes with it. I got the car wash. And something funny happened. I got to my car after the car wash in my new fresh outfit, new beautiful car, washed with the smeller thing, right? The whatever they're called, the air freshener, right? And I go to pick up my pack of cigarettes, and I'm like, I'm not smoking in this car on my new clothes. My car is beautiful. I put the pack down, and I didn't smoke again for years. And the point being, I went home and I went ahead and went to the gym. I went ahead and then started getting back into things. I thought to myself, you know what, I'm commiserating over my ex that broke up with me. But it wasn't really commiserating over her. It was commiserating over the fact that she pointed out to me that I've fallen far enough that I was not worthy, right? So when I did all of this stuff and got dressed and put the clothes on and got the car done, I felt more valuable. I felt of higher value. And I no longer was commiserating over her, because in that moment, I wasn't commiserating that I lost her. I was commiserating that she left me. That's very different. And in that moment, I was like, okay, fine. She left me and she should have. In fact, I can thank her because she left me. I'm now where I am today. And I think I can, and this sounds bad, do better. It's not do better than her, but I can move on to better things, and I'll find someone down the road that's better. And I now have the most amazing son in the world with the most amazing wife, and I'm happy, right? With the most amazing company and the most amazing you. So everything works out, and I think she's doing well. I mean, I don't know. Last I knew, she was a psychologist in Colorado. So I guess she didn't take it as well as she thought, but hey, it moved her to become a psychologist. So she's welcome. Anyway, enough about Anthony's life. So let's take a look at where the markets are. So first, you know what I want to do? I want to go to Facebook. RHINOWealth. Okay. Oh, I sent the picture to my grandmother of our son. Okay. So here we are in RHINOWealth. So before I decide to jump out my window, which by the way, I'm on the second floor, so if I jump out the window, it won't be too bad. Okay. So this is the picture of Nucor Steel. It was $117 and $117.68, less than $1 off the lows. And we posted, we love NUE. We think it's best we wait till Monday, but if it's down Monday morning, we are buying. That was Friday at 2 o'clock. Now, embrace that for a moment. And only Justin loved it, because Justin understood how valuable and lovable this was. Because Justin understood that he knows Anthony well enough to know Anthony's really gonna look back at this and just saying hi, Ant, and hi, Justin, love you, right? So that was this. Now let's go to the tape. So let's see if Anthony's going to cry. Okay. So let's do an hourly. What time was that? 2 o'clock, right? Okay. Okay. 2 o'clock Friday, that was May 20th. So 2 o'clock in Army time or in 24-hour time. Well, actually, let's do half hour so we can see it better, right? Okay. So let's find 2 o'clock. So 2 o'clock in 24-hour time is 14 o'clock, right? 12 plus 2. That was here, right? So let's go take a look. And just to have fun, this is where Anthony became hostage to emotions while reaching out for help for someone to talk him into logic over emotions, and only Justin tried. Okay, so this is what the chart says. Okay, everyone can see that? Okay. Now, this is where we currently are. This is where Anthony wants to jump out his second floor window, except he'll only sprain his ankle, where he will cry like a baby. Okay. And that's there. Now let's go ahead and see. Where is it? Where am I looking? Okay. So that was right here, right there. And this is where we currently are. Okay. So during that period of time, the stock moved up $7.75. That period of time with half-hour bars is 1, 2, 3, 4, 5. Right? 6. That's 3 hours of market time. The stock moved up $7.75. And you know what? Hold on a sec. So I'm moving this over here because I don't want you to see my E-Trade account and password and all that other fun stuff, but I'm coming right back to you, so please stay with me. Let's see. Okay. So this is Nucor. Now let's take a look at options. Now, when we take a look at options, what would we have done? We would have went 1 month out and rounded to the next integer, right? No, next 5, rounded up to the nearest 5. It was 117, so we would have done the 120, right? Okay. So 120. Let's go take a look at details. Okay. Let's take a look at option and price. Let's take a look at the last 5 days. Option price. Oh, stop it. How come it's not showing me? Where is it? Is it really not going to show me what it was for? Oh, it didn't trade Friday. Okay, so this isn't going to show us what I wanted. But basically, what it would have shown you, that's so annoying that it won't show us. Because it didn't make any trades Friday, but it obviously had bid and ask, like, duh. Okay, we're gonna text it out because that's not showing us what we want. But let's calculate it together. So when the stock was 117 and we would have bought the 120s a month out while the market was just down, what, from 124 to that in a day, into 2 days. So it's the strike is 2.5 points away with only 1 month to go. So what would it have been? Maybe $1, right? Because it would have had to make up those 2.5 points and then earned another $1 while the market's crashing. So let's say it's $1. I think that's fair. The stock is currently 125. Whoa, darn it. Let me see something. So what's it right now? All right, so let's go back and pull it up. All right, so what's it right now? Options, June, 120s, 735 by 780. Okay. So what did that cost all of us? Well, I can't say all of us because I can't tell you what to do. But what it cost me, which would have been a good example, or at least a good, hey, look what we did, about 700% in what? 3 hours trading, and why? So what you'll notice is when these things occur, it now, like for me to outlandishly put my name up there and really, really make a fool of myself, that's how much it bothered me. Meaning I'm very, all right, the next one, I'm gonna do the next one, or if that ever comes around again. And then when the market starts moving up, then we wouldn't even touch a 21. So are we gonna touch a 19? Are we gonna touch a 20? Are we gonna touch an 18? And then all of a sudden the market runs away from us. The point of the story is, you're the best, Deborah. The point of this, I'm going to leave this open so everyone can see it. The point of the story is, these are experiences that one only experiences when a bear market's about to turn bullish. Now, that does not negate that there could be a crash coming. That's fine. But we are out there saying now that if a crash comes, it's going to be a V. Boop. Because the amount of money that already left the market because of moments like ICE that are now kicking themselves over moments like Nucor are out there saying, I'm not letting that happen again. If this, I gotta tell you something, if the market crashed, I would take half my net worth and buy it the next day. Because I would have zero belief that that would be, oh my God, the crash is gonna precipitate another crash. We're already down 20%. So what's the crash take us down another 5, 10%? A market that's down 70% as the US economy is the strongest in the world, currency reserve, and every other economy sending us their money, I'm gonna run away from that. It's not a chance in the world, right? So that's that. So let's go ahead and take a look at where we are. Other than, like, we have to get this off the screen because Anthony's like, oh my God, help me. All right. So let's take a look at daily again. And we've been using the Spider ETF, which is a representation of the S&P index as our tool, and it's been working quite well. So let's go ahead and do it again. Now, first, I want to show you something. This is the MACD. I forgot what it stands for, but it's really important. And this is an algorithm based on the pillars of, based on the principles of the importance of the MACD, right? And I know MACD doesn't mean anything to you, but those that know MACD know, wow, that's one of the most important indicators, which I hope is my way of communicating to you that it's important. This just turned green. Now, what happens when it turns green, you say? Don't you worry, let me tell you. Turned green here, boom. Turned green here, boom, not long. Turned green here, there, turned green here. So that would tell us more likely than not, the next move is higher. Okay, cool. That's a good thing to know. Let's go see if our volume, price, and volatility correlate that. So let's get rid of all this. It's just noise, right? We don't like noise. We can leave that stuff because that's more longer term stuff, right? Like trend lines that have lasted for days or weeks. Now, what do we see here? We see volume going up. What do we see here with volatility? volatility going up, right? What is we see with price? Price is actually going up. Okay. Now, is that fair? Because we went always back here. But price is still higher than where it was, so it's fair. Okay. Price is up on higher volume and volatility is higher, but what's volatility doing here? It's leveling off. So if volatility starts leveling off, then what's the next? Oh, come on, volatility. So what's the next thing in the pattern? Volatility higher, volatility leveling, volatility going down. So we can see this. Well, we have seen this. We can currently see this, and we can try to predict this. And what allows us to predict it? Well, volume is going up while price is going up, and this is turning green. So it is our belief that the market is set to move higher. How high it goes is anyone's guess. What I would guess is, can you, and this takes time to naturally see this, but I could see this right here, right? It looks pretty obvious to me because I've been doing this, but you can see a nice line. Hit its head here, came down. Hit its head here, came down. Hit its head here, came down. Here it is. So what are we suggesting? We believe that the path of least resistance is either we're going to get to 400 on the S&P today, or we're going to get to 398 on it tomorrow. Now, for every 1 point of S&P, it equals about 10 Dow points. And that's just a very loose correlation. So one would say the next 1 point of S&P equals 100 Dow points, okay? So one would say we have a possible 600 points more to go today, or a possible 400 to go by this time tomorrow. But when the S&P hits this line, it's, are you going to break it, or are you going to fold? We think it breaks and moves higher. Where that stops, nobody knows. But if you see any type of pullback, well, let me rephrase that. If we see any type of pullback, we're going to look to be buyers. This is our super duper list, which is a little less super duper right now because, let me do this. How far back did I go? What am I doing here? Let me just delete that stuff because that was good for half hours and we're no longer in the half hour. Okay. Anthony, clean your room. Okay. By the way, guys, I mean, sometimes it just looks obvious. Like, come on, really? Anyway, 125.16, lovely. And you know what? I almost bought it Friday for another reason. If you're like, hey, Ant, the world's getting bad, Russia's here, China, all this war. Well, guess what you need in a wartime? Steel. So I just thought across all boards, Nucor was the most amazing opportunity. And, I just wanted one more day because I was being held hostage to my own emotions. Now let's take a look. CME, well, is Walmart. Walmart is currently a 21 red and green. Now Walmart's up 2% on the day, but it's still red and green. It's still a number. And look at this drop. One could easily say, well, and you can hear people, well, Walmart's got to fill the gap. And that's technical talk for it traded here so quickly that it must trade back up to see if it really deserved that. And it's one of those things where, that makes no sense. Well, A, it may make sense, or B, it may not. But it makes sense to the people that are in charge of trading the charts. And to them, it's a self-fulfilling prophecy. So there's a lot of people out there that if this market goes up, Walmart's going to gravitate higher. So in a really weird way, Walmart might be the best buy. Best Buy is another, never mind. Again, I'm going to say the same thing I said yesterday. I want to see Walmart down. I don't like buying things up 2%. But I do say to you that I do also understand that I believe everything I just said to you, and I'm still making the decision to not buy this till tomorrow. which actually equals the definition of confirmation bias. The fact that I'm so scorned from what just happened that I'm actually scared to buy this. And for those that are able to look at me and use me as your tool, I think I've presented what is the right thing to do and what's the wrong thing to do. And if you don't know the answer to that, let me tell you, I think I'm doing the wrong thing by not buying it. So that's where that is. Tesla is interesting because it's like it's down to 600. It popped up here on earnings, so it's not even like, oh, the stock was so high. No, this was because they reported a great number, meaning the stock here factors in earnings of the last quarter, which all of this is discounting. Tesla is a long-term story. I said to my wife that if Tesla got down to 600, I would buy a couple shares of the stock just for our son, just to hold. Tesla is doing a stock split coming up. There's a lot of things going good in Tesla. In fact, I might have just convinced myself to buy a share or two just to hold for him, right? Could Tesla go lower? Yes. But if you're looking to just put $600 away in something long-term, I think Tesla's such a good idea that I might not do it today because I'm busy, but if I had free time to do it, I would do it right now. I think that's it, guys. It's 10:53. It's 7 minutes early. But for those that know Rhino Street, we pushed out the apps yesterday. We emailed everyone. The Android, what about Lucid? I don't know. Let's find out. So it kind of has the same chart, right? But the difference is Lucid, I mean, maybe good, maybe bad. I don't know anything about the company. I do know about Tesla. So Lucid, I think they have a couple of cars in process, which actually might yield to them being the better choice because the large automakers like GM and Ford, they need to get the electric cars. So there is a possibility that they decide, you know what, let's just go buy one of these other companies. But Lucid is a $30 billion company. It does provide a floor in the sense that if Lucid ever got to 15 billion, they'll probably get bought. But that's looking at a stock price much lower than where it is now. All things being considered, my commentary on Tesla is because I'm intimately knowledgeable about the company. I agree with the market they're in, but I'm not sharing the research on Tesla because the market they're in. I'm sharing the research on Tesla because I know the company. So from that perspective, we don't see anything with Lucid that is chart-wise like, hey, go get it. Like it's not like a 20 red and green. So we're not disqualifying it because the market it's in. We think it's a good market, but I can't comment on it as an opportunity. But I do like Tesla. Love the great notes. All right, everyone's been amazing. We did send out, yeah, of course, my pleasure, Deborah. We did send out the email on Rhino Street. If you have an Android, you are able to download it. Everything's fine. If you have an Apple, it was a bit difficult. In fact, it didn't work. Good news is it is on my phone. The difference being I was invited to it because we were testing as a team and it got sent to me via email. It wasn't a public link. That allows Apple to know exactly who I am because I signed up with them. Meaning the worst case scenario, we already know a way that works and we can get it on your phone. Short of that, we're trying to find alternate ways that allow us to share it publicly. But if we are unable to find that solution, we will send out an email to our rhinos. Now, who are our rhinos? Everyone that's ever owned any coin. And of course, if you owned coin, you participated somewhere. Meaning everyone that would care about it today will get the invite to join it by the end of today. The app looks amazing. I love it. So Justin, I believe, has a Android because I was able to see that he signed up as a user. Justin, you are now absolutely famous, even more so because I want to go ahead and post a picture. So I have to go through this and find the screenshot of me identifying the chart as nobody wanted to help Anthony from drowning except Justin. But we are sorry for not sharing the possibility of 7. Well, actually, I take that back. We did share it. We did post it. So let this be a lesson. If anyone does only the things that I do, well, shame on you. You cost yourself 700%. But I still love you. So that's that. All right, let me go. I have Rhino stuff to do. I see my chat blinking, and it is our main developer, which means that our app is closer than I thought. I have an Apple and couldn't get the app downloaded. Yes, Deborah, that's the iOS system, and we are working and working and working. And I want to commit to you that it'll be done today. And that commitment is based strictly on my trust in my team. It's not my ability to actually code that stuff. So I say that with that caveat. It's not in my own hands per se, but if you said to me, Anthony, do you think it's going to happen today? My overwhelming answer is yes. I'll try. No, I'm going to email it to you. Don't you worry, my dear Deborah. I'm coming around the mountain for you. All right, I got to actually go. Now it's just me talking. Love you. Bye, everyone. Bye, guys.